Good afternoon, Corey Schrader, Black Creek Wealth Management. Hope y'all are doing well. It's about 1:30 here on a Monday afternoon, and I wanted to go ahead and just videotape outside today, as it kind of gave me a little bit of a metaphor for what's going on with the overall markets. As you can see right now, my head is clearly subjected to sun. However, just like the crazy markets this week, there's a little bit of some clouds overhead, right? So all looks well, but there's a little bit of some concern that's going on we need to talk about. So really what I'm going to focus on today is what's going on in the overall markets, as well as, what could you be doing this week, at least on a short-term basis, to protect, if not profit a little bit. From a long-term perspective, I continue to tell everybody, listen, nothing has changed. We're still at war with Ukraine. We're still obviously with the inflation issues. Energy prices are high, trying to figure out how do we divert oil and everything away from Russia and be a little more independent, not just us, but just globally. It's more of an impact on Europe, but that does obviously impact us here. And of course, with rising input costs, you have rising inflation and price inflation. I don't know the last time y'all went to McDonald's or Chick-fil-A, but to buy 3 meals, it basically costs you anywhere from $35 to $40, let alone filling up your gas. I mean, my Jeep, I don't even have to put the good stuff in, and it's still $100 to fill it up. So obviously we're all feeling it. So what I'm hoping to help you out with is a couple of things. One, just wanted to make sure that you know what's going on. So again, you can prepare and protect from any sort of extreme downturn. I am looking at the economic indicators on a regular basis. There are no guarantees, and I try to explain that to everybody. At the end of the day, you can be aware and know what's going on and be out of the way. But trying to time this market bottom is just not going to be an easy thing, especially since the whole dynamic has just changed. Interest rates are going back up again. They're probably going to plateau somewhere around 3.25, 3.5, which is fine. But the market will still continue to gyrate. I still think we have a really good chance at least coming back from some of the losses at the end of the year. We may see a slightly down year, but it's nothing like 2008 or 2001. But you do need to know what you're owning. So don't just willy-nilly buy stuff, okay? So what I wanted to also talk about is this concept of trying to time the market, right? And most people will tell you time in the market is better than trying to time the market. Well, the other side of it is when you look at what's going on with the actual market itself, and I'm going to share my screen with you here. So there's something called a dead cat bounce, okay? And all that means is when you have a downward drafted market, which is what we've seen over the last 6 months, there's going to be times throughout the year where you're going to see it do this dead cat bounce, where it essentially comes back, and I'm going to go ahead and put it on the 1 year here, where you can see we're clearly in a downtrend, but it wants to rally back, and it's doing that because the market is an upward bias. The S&P 500 is an upward bias, which means that companies that die get removed from the index and they add ones that are good. So you're always going to have the best of the best that stays in the index. It's one of the main reasons why I love looking at indexes in general and trading off of them, is because they have inherent risk management. But overall, in this downward trend, you're going to have these huge quick spikes that are known as the dead cat bounces. And you can absolutely get caught in what's called a whipsaw, where you're like, okay, I'm going to go ahead and jump into something here. And, oh, wow, it took off. I need to be on it. I have this feeling of regret. I can't miss out. And then you end up getting caught in one of these little peaks. And then you feel, of course, this further downward leg. So when you're looking at your trading, when you're looking at just a long-term trend, and again, I'm show you here quickly, is when you look at it over 3 years, clearly the market's going to correct. We have these big isolated events like COVID and tech crisis and things. Those are once in a decade kind of environments where, obviously if you try to figure it out and you're able to catch it, it's very, very advantageous. I mean, to be able to buy here and sell here, you'd have been a genius, right? And I know a lot of people that maybe caught in here or caught in here and they were very happy with it, right? So even though you don't necessarily catch the bottom, it doesn't mean you need to just get annoyed and frustrated if you don't. the market's going to continue to go higher and higher and higher. It's been doing this ever since the market is around, and it will continue to do this. And it's just because that is what, as I said before, there's a term called survivorship bias, and that's what it's dealing with. Is all these bad companies that got wiped out here got removed or just substituted, and then we continue to see the market push higher. So had you bought something back, in the back in the 1990s, at like $40, you would have been up to roughly around 420. So 400, basically 4,200. So the biggest takeaway again for this week is just watch these short-term gyrations, or whipsaws as they're called. I already put this out a little bit. I put it on Facebook, and if you want to follow me on Facebook with regards to the investment trainer, or even my personal account, Corey Schrader, is I'm going to continue to put these things out probably as we're starting to see things sideways. I want to make sure you guys are protected and making money. So I'm going to probably do it every single other day. So probably Monday, Wednesday, Friday, as we kind of go through this, because it is going to be choppy waters for a while. And I want to make sure that you are taken care of. So as you're looking at what's going on, if you're trading short term, right now I'm looking at about 430 to 430 to about 390 on the S&P this week, which is about a 5% swing to the north, 5% swing to the south. So if you own 100 shares of SPY, you could look to do what's called a covered call, where you would sell something up here and make a premium off of it. So as this price is gyrating, you're making monthly income, or even quarterly income, or weekly income. And I do actually weeklies, and I do this for clients. So if it's not something that you're doing and it's something you want to reduce your risk, but also bring in a little bit of some income, let me know, and I can definitely talk to you about it. But the biggest thing, like I said, throughout this week, and you can even see it here on the left, we're going to have some movement, and it's not a bad thing. I have horrible analogies, like a stingray doesn't find food until the sand is kicked up, right? Well, I'm looking for food, and technology is still going to be somewhat impacted this week, because high PEs are still affected just by rising interest rates. They haven't continued to rise as much as they were. We're probably going back to where we were back in May, which is fine. But with that, there will be a somewhat controlled decline, and that's something we can actually just monitor on a weekly basis. So if you have any questions, of course, reach out to me, blackcreekwm@gmail.com. Go onto my website, Black Creek Wealth Management, blackcreekwm.com, if you want to connect with me there. Either way, I hope this was helpful, and have a great week. And if you have any other questions, like I said, get a hold of me. Have a great day.